My name is Dick Lavine. I'm Senior Fiscal Analyst for the Center for Public Policy Priorities in Austin. I'm here to testify against House Bill 414. You will be getting a 30-page report from the LBB. It came out about 6 weeks ago called Overview of Research and Development Tax Incentives. It's a very good report, has a lot of good information, a lot of good information about what other states do. A lot of my testimony will be based on that, but what I have done is in this paper, which I guess you'll be getting soon, called Excerpts from the LBB report, is highlight some of the things they have pointed out. I want to make very clear that the LBB, and they're very clear in their cover letter, they're not making any recommendations concerning R&D tax credits, but I think they make a lot of good points concerning how you should view these as you're considering it. The first is having to do with reporting that you were just talking about, which is they say that past research is mixed and much is still unknown regarding the efficacy of state R&D tax credits, mainly because of lack of good state-level data on the expenditures and credit claims and the unavailability of individual company-level data. Now, we did in the past, under the old franchise tax, as Dale is explaining, have some reporting requirements, and that is here. This is the Controller's report under Senate Bill 441, and you can see what she did is she did report every 2 years on the R&D tax credits, and there's some useful information in here. For instance, she reports that the total amount of credits applied against the franchise tax was just short of $100 million, but unused credits were about $350 million. And that's one of the things you have to keep in mind with these long-lasting credits. I believe, Representative Button, that you have a 20-year time period on yours, and that's similar to the time period on the former franchise tax credit. But if you look at this table, which is from the exemption study that the Controller puts out every 2 years, you can see that in 2013, credits carried forward from prior credit provisions, that's primarily the R&D tax credits, reduced tax revenue by more than $22 million in 2013. And for 2014-15, out of the future budget, almost another $30 million. And this is from a tax credit that expired after the tax reform of 2006. So you can see that the decisions you make now about an R&D tax credit are going to be influencing the ability of the legislature to fund public services up to 20 years into the future. So it's something that you have to give very serious consideration to and make sure that you keep good track of them by reporting requirements. Another thing that the Controller pointed out in her report was that the R&D tax credits were fewer than 13% of the credits were used by corporations with fewer than 100 employees. So in other words, this is not a tax credit for startup companies. This is a tax credit that I think will be primarily used by well-established firms who do R&D because that is their business and that is how they make profits. But of course, you won't know who is using it without a report that lists every single company and how much credit they are claiming. We do not currently require that in Texas, but many other states do. And I've given you just, for instance, North Carolina, which lists by company and by credit, 7 different credits, what companies take these. This page is not even back and front. It's not even all the A's. But this gives you the kind of information that when you come back, you can look and you can decide where are these credits going, not just by industry, not just by geographic area, which you had in the past, but specifically which companies, are they big, are they small, what kind of work do they do? Going back to the Senate Bill 441 report, I mentioned the geographic distribution. It is very interesting here that under the old credit, at least, the credits taken by companies in Dallas County and Travis County together were more than 60% of the total credits taken statewide. But you would not know that if there was no reporting requirement, and there is no reporting requirement in the bill in front of you. The rest of this page of my excerpts just points out, as you were mentioning, you need to know the amount of job and wage growth. I mean, if that is the purpose of the bill, you need to have reported whether or not the bill is accomplishing its purposes. And this is accomplished best by having the companies submit pre-applications with the information to the controller or to whoever so that these statistics are available. But all this data is just data unless you act on it. And there's no necessary reason to act on it unless there's a sunset date. Now, the sunset date does not mean it's going to disappear, but it does mean you're going to have to take a look. Otherwise, it will. And I know that in the next week or two, you'll be looking at Chapter 313. Now, I do not expect that Chapter 313 will disappear, but it's due to expire at the end of 2014, so you are required to take action on it, and I am hoping, and we'll have a chance to talk about this in the future, that you will make improvements on, based on what you've experienced on the report from the controller, what your expectations were that 313 was going to accomplish, and what it actually has accomplished. You would not do that if there were not a sunset date. There's no sunset date in this bill and no sunset date for most of our tax incentives or exemptions. And as the LBB says, it's an incentive for review. And one last thing that the LBB mentions is a statewide cap. This is one way to keep under control the future drain on state revenues. We have had other bills with statewide caps. You may remember, Representative Villarreal, the sales tax incentive for economic development. Not going into the history of it, but it was a way that the companies got a credit back if they had city or county tax abatements but had to pay their school property tax. They could submit a receipt for their school property tax paid, and the controller would give them back the amount that they had paid, except that there was a statewide cap of $10 million. So all the applications came in, the controller would add them up, and then she would prorate for all the companies how much their credit would be, and my memory is they got about a third of their total credit. It was still worth it to them, but at least this credit did not get out of control, and there was a cap on it. You could do the same thing with the R&D tax credit, and if it was prorated for a year, all those companies would still have their credits they could use in the future. They would not lose them, but at least the impact on the state budget would be predictable and controllable.
But in the states that have a cap, are the entities that make the investment guaranteed to eventually, no matter what the cap is, they get to carry it forward and forward and forward and forward until they can actually use it?
Well, I was saying they would get to carry it forward. I guess you would have to decide if it got carried forward more than 20 years from the date of the expenditure, whether or not it would then expire. But I would not think that the cap would be so strict that over the course of 20 years they wouldn't be able to get 100% of their credit back.
Okay, so you think if we do this, that we should have, before the business actually does the investment, that they should apply to the comptroller and say, does this qualify for R&D tax credit, and here's what we plan on doing. You might want to have some more requirements, but at least a minimum of that.
Yes, apparently that's the way it's done in several states.
Okay.
And if there's other requirements about wages and benefits, whatever else.
And then you would suggest that we have a sunset provision.
Yes.
And how long of a term?
The former R&D tax credit under the old franchise tax had a 10-year sunset. You never got to it, but 10 years might be the right amount. I can't say. No longer than that, certainly. And
then for the controller to compile a report about who's getting the tax credit and how much they're getting each year?
Or biennial.
Biennial, yeah.
Because nobody's here to read an annual report.
Right. Okay.
Then when we're talking about the review, Dale suggested that even the review under 441 is not adequate because you really are not looking to see whether you've accomplished what you were set out to do. It's just a report on how many credits were taken, what kind of company took them, and where they took them. But I've given you, this is from the state of Washington. Don't forget, this is Washington where Amazon is located and where Microsoft is located. But they weren't afraid to put their R&D tax credit, and they had both the sales and B&O as their gross receipts tax, put that up for sunset review along with many other taxes that they have. And I think they did an excellent job, and if you look through starting on, it's page 102 of this document, These are the kinds of questions they asked. What are the public policy objectives that provide a justification for this tax preference? And is there any documentation on the purpose or intent of the tax preferences? In other words, did the legislature state what they were intending this thing to accomplish? Then what evidence exists to show that these preferences have contributed to the achievement of these objectives? And then they report about how many new jobs were created. They conclude it's unclear what R&D spending might have occurred because of the credit, which is a problem for all these things, of course. You don't know whether this would have taken place anyway. It's a great unknowable of all economic development incentives. But as you know, there are many reasons why somebody would locate in Texas, and among them, of course, is a skilled workforce. But the only way we're going to get the workforce is to have an education system that provides the skilled workers, and you can't have the education system if you don't provide the funding for our public schools and our institutions of higher education. So you can't reduce tax revenues too much, or you'll be taking away the real reason why R&D is done here. This also goes on to report about for those preferences enacted for economic development purposes, what are the economic impacts of the preferences compared to the economic impact of government activities funded by the tax? That's the point. There's a trade-off. You give an incentive, you're trying to incentivize certain activities, but there are other things that incentivize these same activities, and sometimes those require public spending. And you can read the rest of it for yourself about what are the usual, what are the future tax impacts, and if these were to be terminated, in fact, if sunset were to happen, what would be the negative effects on the taxpayers? Reasonable question. You can't just yank the rug out from under them. But the last piece of paper I want to refer to is this is a summary of the conclusion of this Sunset Commission in the state of Washington. And they said that they recommended that the legislature allow the R&D tax credit to expire in 2015. They had a sunset date. And they said, even though this is obviously a state that's heavily dependent on certain high-tech industries, they're willing to let it expire because they say it's clear that the cost of these preferences greatly exceeds the estimated benefits. And the last paragraph is, the legislature's objective to create quality employment opportunities in the state might be achieved more cost-effectively in other ways, such as partnering with high-tech R&D industry to provide educational and training programs that develop human resource skills needed by the industry. And that's the point. You should not start with the tax credit. You should start with your goal. And if your goal is to create good jobs and to create a vibrant high-tech community in the state of Texas, you should examine what is the best way to accomplish that. Is a tax credit the best way to accomplish that, or investment in higher education the best way to do that, or some combination? I believe, Representative, you have another bill for tax credits for investments through higher education. That might be the right mix between the two. But I think a lot of this information is applicable to all the bills that you'll be hearing this session. You need to know what you're doing with your incentives. You need to have a report on whether or not you're accomplishing those objectives, and you need to have, to tell you the truth, some kind of hammer, some kind of sunset to force you to take action, to review it, see if it's doing what you want it to do, and seeing if there's not a better, more efficient, more effective way to get that done. Thank you.
Thank you. Any questions for Mr. Lavine? Thank you very much.
Okay, thank you.